Good afternoon and welcome to another edition of the Big Joel Show. It's going to be an exciting show today. I've got Eric Douglas with New American Funding. Eric is a branch manager in, I call it Boston Metro. He can correct me on that, but Boston, Massachusetts Metro. And I've known Eric for how long?
We've got to be pushing 9 years now.
9 years. So I met you when I was 24. You guys can do the math on that. I'm excited to have Eric on because Eric has an interesting story, and I'll let him tell some of it. 2016, 91 units. 2017, 99 units. 2018, 108 units. So a steady upward tick. Again, those of you that know me know that I really don't care about your average loan amount. I care about your units. So it doesn't matter what the volume is. You guys that understand Boston know that it's good, solid volume when you're doing that many loans. 2018, 93% purchase as well, just so you know, because I know there was a lot of refinance opportunities in 2018. So 93% purchase. So basically about 100 of those were purchases, or we'll call it eight to nine a month, which is big. I also know Eric's business is pretty much 100% referral from real estate agents. And the interesting thing, I'll tell you how I met Eric, and we'll let him talk for a minute. Is I met Eric, his boss said to me, hey, I got this guy that came over from Bank of America, right?
Correct.
Who was really a refi guy, doing a lot of refinances from like private banking and just internal referrals,
Correct.
right? So he's technically sound. You know, he knows what a 1003 is. You know, he knows how to do loans, but doesn't know where to get them.
Correct.
And his boss, Scott Johnson, Scott, if you're listening or watching, what's up? And his boss, Scott Johnson, said, hey, Joel, I want you to meet this guy, Eric Douglas. I think you guys would, model match up well together. And, he needs you. He doesn't know how to go get business from real estate agents because he's really been having it handed to him, but yet he knows how to do loans. So I went up and I met Eric, I think 2011, 2010?
10, 11, yeah.
10 or 11. And the rest of the story I'll let Eric tell. But Eric, just start off, let everyone know, how old are you?
I'm 36.
36. And married?
Married.
How many kids?
3.
3. Nice. And is there talk of a fourth, or is that negotiation over?
We are done.
Yeah, it is official. Lisa, if you're listening, you can text me and let me know whether that's true or not. And 2 boys and a girl.
We do
right?
know that she has the final say.
Yeah, two boys and a girl.
Correct.
Right?
Yep.
How old?
7, 5, and 3.
Okay. The only reason I bring this up is not to give you Eric's personal business, but so you understand that he's a dad and he's got 3 little kids and he's got his hands full for sure. Meaning making sure he's at activities and doing all that stuff while he's running his business, which is a healthy business in Boston Metro. So, Eric, what I'd like you to do is start with there are people that are listening today that are maybe they're transitioning from being a refi person. Maybe they're transitioning out of a call center. There's so much recruiting going on right now. People recruit anyone doing anything that knows anything about loans.
Yep.
So they come out of a call
like
center.
04.
Yeah, 04. That's exactly right. So they're coming out of a call center. They don't know anything. I mean, they're you in 2011. Start with how you started. I mean, your business, I know, is referral based.
Yep.
From agents. Dial it back and talk a little bit about how you started, and then I want to get into some of your systems because you do a lot of really cool systems once you have the loan.
Yeah, sure. I mean, I think it really goes back to our initial meetings, right? I had a very captive audience from a large institution where referrals were all coming from an internal mechanism, and it was the client base. And before I left, I went around to everybody and said, hey, Joel, we've had a really good partnership. You'll keep referring me, right? Because you know that this platform is not very good right now. And everyone gave me the yep, and then got outside and it was cut off.
Crickets.
Yeah.
Silence.
Phone wasn't ringing.
Yeah.
And, I hadn't really done ever outside true referral business as the business is today. Because when I started in 04, 05, back in little shops before I got to the big institution, it was dial for dollars. I mean, you were dialing the phone book and literally anyone could refinance and anyone could buy a house. It was click a button. And so
80-20, breathe on the mirror. You're approved.
Exactly.
Yeah, exactly.
I don't even think you needed to breathe. I think it was just, do you have some information, at least one piece that we can verify?
Do you have
Done.
8 digits of your 9-digit Social Security number?
Yes.
Approved. Yeah, exactly.
If not, we'll get you one. Done.
Yeah.
So, then we sat down and kind of went through like, what are life goals? What do you want to do? And decided we really needed to rebuild from the ground up. And I think it all started with saying, okay, where's your local market? And really starting to, as you would say, be everywhere all the time. It was picking a small circle just to start, bite off small pieces, find a local area to know the market, get to know the agents, really start to build relationships around where I was living, which is, we can cover at some point, is really important for me now because I don't have a huge area. I cover a large area, but generally speaking, most of my meetings are within like 6 miles of my house. And so that was all
great quality of life.
Yeah, right? It's fantastic. And so starting at that small nucleus right around my house of agent partnerships and, different areas that we were trying to emerge ourselves into.
We'll just unpack that for 1 second.
Yeah.
So what Eric did is he planted a flag. Here's where I live. Boom. Okay. And then we drew a circle around it to build out. And he stayed in that circle. And again, one of the main reasons that loan officers fail and real estate agents fail, big agents, you don't want any new friends. You don't really want to do your job. But the other reason is you're using a shotgun approach, meaning you're just everywhere. Yep. You're doing a loan in like Cape Cod. Correct. You're like, what the hell? What are you doing a loan in Cape Cod? You don't even know where the houses are. Not that you wouldn't take it, but you're talking to some agent in Cape Cod. Eric, where were you today? I drove to Cape Cod to meet with an agent. Wait, what? Okay, you'll fail if you're sitting in your car all day. You need to be in front of people. So he drew a circle, geography-wise, around his house, and then identified and killed. Correct? Yeah. And I'll let you keep going. I just wanted to explain to everyone because people are listening right now that are all over the map that want something to do. Hey, I got nothing to do, Joel. I'm watching SpongeBob all day, pounding popcorn.
Right.
What do I do? Hey, well, you start right to get in your car.
Yeah, and
right?
if you can remember when we first started doing that, before I really started to go out and introduce myself, I think I called you before the first meeting I was ever going to go into and be like, I said, I don't know what to do. I don't want to walk in. And then, it was all downhill after that. Because once you get over that first kind of in-person call reluctance of true accountability type of relationships, it's clear sailing after that. But I think you hit on the other big piece to that is you have to reset your mind to know that you are going out to develop new relationships. And again, per your model, is new best friends. So if you're not open to that, and you're not open to kind of rebuilding your friends and your structure, or you don't want new relationships, then stop. There's no point to go any further. So
that's interesting, everyone. So whenever I meet a loan officer and they say to me, "Oh God, I hate this business. I hate real estate agents. I just hate it." But I always, I'm immediately like, "Okay, you're doing this all wrong. You shouldn't be hating this. You should be loving it, and you should be loving your agent partners, your partners.
Right.
You should be. And if you don't, you got the wrong ones.
Right.
It's not the right people. And loan officers chase agents all the time that they don't like. And I'm like, well, why are you doing that? That's no fun.
Yeah, and there's definitely people you meet along the way that just are not good model matches. Doesn't mean you can't have a beer, but you just don't work well together. So you move on to the next relationship.
I'm a firm believer, 10 great relationships is 20 loans a month.
Yeah.
Period. And I don't know how many of you all are listening or watching that are doing 20 loans a month. And let me help you out. Statistically, very few of you are. Very few of you are. Because I think the average LO closes 2 loans a month or something like that, or 3 or something like that, loan officer. So just think about the power of that, the right 10 relationships.
Right.
Not just 10 relationships, the right 10 relationships. So you went out and you ground and pound. Met people, started to establish relationships. What did you focus on? What was the most important thing when you were meeting people?
Being genuine and just, again, being open to the relationship. It was getting to know them first rather than, all these sales seminars that you go to. It's walk in.
Here's my brochure.
Yeah. Business card, cut their throat.
Yeah.
Give them the packet and ask for the business. And you and I have had this conversation many times, is I can't tell you how many first meetings I've had. We got to the end of the meal, end of the conversation, and the agent or whoever the partner is goes, "Oh, geez, we've been here for an hour. We haven't even talked business yet." And those typically end up being the best relationships in the long run.
Absolutely. And agents, if you're listening to this, I know a lot of agents listen to the Loan Officer podcast and vice versa. You sell more houses when you have a deep relationship with your lender, period, end of discussion.
Yeah, 100%.
You just do.
Yep.
I mean, some of the best agents in the country, when I ask them, who's your lender, they don't list 9 lenders. They list one person.
Right.
And there's a reason they sell that many houses, because they're tag teaming those clients.
Yeah, well, it's their time, right? I mean, to manage a pipeline when you're doing a lot of business like that, to have to call 7 loan officers on 14 transactions
is brutal.
It's time consuming. Not to mention that a lot of those loan officers may not pick up the phone, right? So that just may not be their model, or they are one of the call centers, or they're, whatever their difference is. It's just a lot of phone calls to make on a weekly basis, or whatever their touch point is.
Now tell people just to hop. I want to hop over because you do a lot of cool stuff with technology. So, talk a little bit about sort of your system. I know I'm bunny hopping over. When you get the loan, you know what? I'm going to rephrase that. I want to go to getting the loan. I want you to talk to. I want people to hear what you do when you get it. Because, and everyone, I apologize. These podcasts are not 17 hours long, and if they were, I would go a lot deeper. But let's. You got the referral. Somebody just called you. Hey, Eric, it's Jim Smith. I was referred by Joel over at Remax. He wants me to call you and get pre-approved.
Sure.
I want to go out and buy houses, and he said I got to talk to you first. Sure, you get those calls all the time, right?
Yep.
What do you do? What's your tactical get dirty with it? So how do you handle new clients?
So there's probably two different tracks. First piece is obviously to get in contact with the client via phone right away, assuming that's unless the agent tells us another form of communication. Typically having an upfront conversation just to answer any initial questions they have, kind of tee them up. The best thing that we can do for real estate agents is to get them actually ready to buy, meaning they are fully docked out. Everything but the appraisal and title is done, and their job to identify the property. What do they want to buy? So really it's to get them comfortable to the point that they're okay with us pulling credit, giving us documents of bank statements, social security numbers, W-2s, pay stubs, all that stuff that we're going to ask for. So that's probably our biggest role, is to convert the referral and get that client comfortable enough to get to that point where they've got everything in.
So when you take that call, let's say in this scenario, you just got an inbound burner.
Yep.
Hey, it's Joel, referred by so-and-so, and you were able to pick it up. Hey, what's going on? Your most important thing is establish rapport immediately. Then comfort, meaning explain the situation, whether they're a first-time buyer. What I find is, which is interesting, the second and third-time buyers that think they know everything sometimes need even more, because they've been given bad information before.
Or it's different. It's different, right?
Correct.
20, 30 years ago, it was just a different process.
Right. And then what are you doing? Is there a point when you're putting them into some type of technology? If you do you enter the technology with them? Walk through moving a client, they're a client now, through the beginning of your system. They do not have a house. They do not have a contract.
Yep. So for their purposes of what they see, typically we're getting at least a basic information online application, and it's usually more so to save them time from us inputting base information into the system.
Who does that?
Client.
Okay. So do you walk through the client? Do you walk them through? Or do you say, go here?
Depends on demographic comfort level. It's an adaptive process depending on how I gauge off the initial questions as to how comfortable they are.
So you don't bounce. You're not bouncing them all in.
Correct.
Okay, so everyone, this is important because one of the main mistakes I see loan officers making all over the country is they literally talk to someone for 3 minutes and bounce them into their technology. And then their pull through is like crap. It's like 0. It's like 2 out of 100 because the people disappear. They get in there. They don't know what to do. Kids' ages. Why do they need that? Click.
Correct.
I'm out.
And
I don't want to do it.
And we're immediately setting an expectation that after they fill out the online application or whatever that initial quick information is, we're following up with them with another phone call and potentially another email to either set up an in-person appointment to review all their documentation so they can bring it in, or if they're opposed to that, then obviously we'll work with their...
When are you pulling credit?
Hopefully immediately after.
Okay, so when you do the initial intake comfort call, there's no credit pulled.
Correct.
Okay, you're putting them in, you're explaining them. You may go in with them. If it's that type of client, you're going to be like, hey, do you have a minute now? Let's go.
Correct.
Click this link. I'm in there with you.
Yep.
Let's make sure it's done. Or if you've got like a souped up millennial that's hot to trot, ready to roll, or whatever, they're going in there immediately.
Yeah.
You let them go in.
And I think a lot of agents know we'll take the time. So a lot of times they're having the conversation with someone. They'll call me and say, hey, Eric, this person is not an online person. So we're literally just immediately setting up an in-person, hey, try to bring me as much as you can.
So how did you get, this is a big thing when I meet with teams or when I meet with loan officers, do a lot of business. I always find out when I pull scabs off, and really get down to the bottom, that the agents usually aren't referring them the most productive way they could. Meaning it's call Jim Smith, not, hey, can you call Jim Smith? He's looking at townhouses in this area. And by the way, this is the one he likes. It's called Jim Smith. So the loan officer has to do a lot more work, which therefore slows down the agent.
Yep.
And it would have taken the agent 10 seconds. It sounds like your agent partners are giving you that information. Why?
It's from developing the relationship. Obviously, like I said, day one, walking in that first meeting, I'm not saying, hey, this is how to refer me business. It's doing the interactions. And then as those opportunities arise, I mean, we're at the point now with some of our better partners that we actively sit down and engage in business planning conversations like, okay, how do we do more this year? How do we free up time? Where do we best spend money? How do we maximize the return? So it's becomes a business planning and coaching conversation both ways to develop both sides of the business.
I wanted to hop on that because you said, the agent actually saying, hey, Eric, this is not an online person. That to me was a trigger. That means you guys are really partnering. Like they know to give you that information because it's going to be better. They found it out and they know to communicate it.
Yep.
In such a way that benefits them. It's unfortunate a lot of agents, don't have those type of relationships with the loan officers they're referring to, and it slows the whole process down completely. And you could actually give bad customer service because they knew something and didn't even tell you.
Yeah, and a lot of times to get to the point that we have open free dialogues, it started with we try to send a summary after our communications with the client to say, hey, we did this, this, and this. Just in case you didn't know, they told us this, this, and this. These are their preferences. And so we try to give them as much information as possible, and it starts to become a reciprocating.
So you're almost teaching your partners through doing.
Yeah, absolutely.
You're showing them that even if they're not doing it, you're going to do it anyway to the point where they're going to go, hey, I should probably do this too, because he just gave me all this information back. I didn't even know that. Right. I didn't know that their grandma was going to come live with them, and they needed an in-law suite. I mean, we didn't know.
Yeah.
But you knew because she's co-signing whatever. You
Correct.
Found out they didn't know. Okay. So do you try to physically get in front of your clients
when at all possible?
Okay. And so are you trying to? I mean, is it 50% probably you actually can get in front of?
I would probably say it runs somewhere around 50%. Whether it be scheduling of them
you can have
or just
reloads
preference, and
so
we do some out of state stuff. So
I mean, you're in Boston, which is like tech, very techy, which would lead itself to I'm not meeting with you. Text me, right? Yes. For a younger buyer or even older buyer, it doesn't matter if they're in the tech business. What do you say? to people when you're broaching that subject of, I want to meet with you? Share with everybody what you say to a client, because a lot of people are scared to say it.
Mm-hmm.
They think they'll go away.
Mm-hmm.
They don't know how to say it. What's the value proposition? Why do I want to drive to your office? Or you could meet them at their office. It doesn't matter.
Correct.
Why do they want to take the time to be in front of Eric Douglas?
Typically it would go something like, Joel, there's a couple different ways that we can handle this. Once we've set up your pre-approval, I'm going to send you a lot of information. There's going to be a lot of different breakdowns and closing cost worksheets and budget planning tools that I'm going to send you. It's a lot to process. If you're buying with someone, you and your wife might have a lot of questions when you look at this. So I usually find that a lot of my clients, I find it extremely helpful to go back and just sit down with me to go through it one time and kind of get all the questions at once, so that we're all on the same page. We could even have your agent present during that conversation, so we can talk about some of those different price points and where you're comfortable on budget versus where you're not. And then we can retool that back on specific properties once you get out and start looking at properties. It typically taking away a lot of the objections, like what's the value, just by putting it out there to say, let's sit down and go over it. And a lot of our pre-approval conversation is about budgeting, is where you want to be versus where we can approve you at. And there's going to be a range in between, most likely.
Yeah. And, a lot of loan officers, they'll be listening to this. Oh, that takes too much time. I'm too busy or whatever. And someone I had on earlier today said, spend 30 minutes up front and save, 9 hours on the back or whatever it is.
Yeah, always.
Those of you loan officers listening to this, anyone that sells anything listening to this, understand that you're not being cool or being more efficient by delegating something that's this important, because even if Eric spent an hour doing that, he is not going to lose that buyer. Correct. When that buyer buys something, you are doing the mortgage, period. End of discussion.
Yeah. And I'll
Correct?
tell you, yeah, and even if you do run into someone that's a quote unquote rate shopper, even if you've done all of that, I will tell you that 9 times out of 10, even if they feel guilty at that point, and they'll at least come back to you to give you one last shot to match or beat or whatever. And at that, you get a high percentage of conversion where you can usually make the numbers work.
2 best sales techniques: guilt and sympathy. You can't have either one of them without a relationship. That's factual. It's very hard to build that relationship in someone's largest purchase of their lifetime over the phone. And there's a lot of great salespeople in the mortgage and real estate business that are great over the phone. But let's face it, nothing trumps that face to face.
Yeah, absolutely.
When you see each other. So, okay, so we put them in. Now they're in your system. Talk to me about your system a little bit. I know you use a CRM. You're a Salesforce guy, right?
Yep.
And I'm sure your company has something as well.
Yeah, we use both together.
Talk to me about the experience, the customer experience going through. I've got a ratified contract, or I don't know what you call it where you are, but it's accepted by the buyer and the seller. I've got a closing date. I'm live. I'm live in your system now. What happens when I'm in process? What happens when I get approved? What happens when the appraisal comes in? Walk through all your points, all your touch points. And I know
we don't have enough time.
You're laughing because you have 9 zillion of them. But give the major ones. You know what? I rephrase that. Give the ones that you think have the highest impact.
So I'll actually back up before the contract, because I think there's some impact initially when they get referred. So initially when they get referred, they do go into our CRM. Mm-hmm. In addition to that, thank you notes go out to both the realtor and the client. Once we've gone through the pre-approval process, realtor's immediate. They get their thank you notes shortly thereafter. Okay. Once we've had the meeting, or the if we're doing it electronically.
Dear so-and-so, thank you so much for referring this Smiths to me. I really appreciate your business.
Correct.
Blah, blah, blah.
Yeah,
okay,
whatever else is going on in the relationship.
Dear borrower, thank you so much for choosing me to help you with your new mortgage. I look forward to blah, blah, blah. Okay, got it.
Yep.
Gone.
And so from that point forward, we're now generally touching them. If they're pre-approved, ideally once a week, once every couple of weeks, depending on their...
EIC, BP.
Yeah.
All right.
So, and then once the offer comes in... we are immediately touching all parties in the transaction. So we're talking to the buyer's agent, the listing agent, the attorneys, to essentially cement and get everyone on the same page. Buyers, of course.
Verbal?
Verbal.
Okay.
Then...
You're not just hitting send and praying.
Correct.
You're calling.
Correct.
Okay, got it.
assuming sometimes with some of our agents, they actually like to call prior to putting in the offer. So that sometimes that conversation's already happened. I think the biggest impact points is that because we did the initial call, we will typically we tell them we'll be sending them a transaction summary once the buyer has locked in and they are moving forward. And so that's kind of the next touch point where all parties get reintroduced by us and all parties are copied so that everyone can ensure they have the correct contact and communication information throughout the process. And that's usually a big one for us. We'll, typically get some type of response from all parties saying, yep, my information's correct, but they're starting to engage. And that starts to tee us up where they're looking for our communications.
Okay.
And
meaning it's a call to action. So what you're saying is instead of saying, hey, I'm Eric and this is what we're going to do, you're saying, hi, I'm Eric. Can you please cross-check and make sure we have the right info?
Yep, exactly.
Okay. All right. So it's call to action, which engages them.
Yep, exactly.
Okay. All right.
I think our other big points is, we can go through all of them, but, everything from application in, appraisal ordered, appraisal back, mortgage contingency, all those major points within the transaction are getting touches to all the respective parties as long as all the parties are good with it.
Email?
Email and call, depending.
Okay. All right. You make some of those calls, I take it?
Yes.
If it's agents?
Agents, absolutely. Clients will sometimes start to move towards the team towards the end of the process. And then at the very end, prior to closing, I'm typically back involved to cement good experience closing reviews.
So the reason I brought that up is most loan officers delegate all that stuff through the whole process. And the reason I wanted, I was pretty sure Eric was doing that. I wasn't positive. But, sort of in my practice, people I teach, I always tell everyone, hey, no one should ever be on the phone with an agent partner except for you. That's always you always have an opportunity to develop a new relationship or deepen an existing relationship. And, that conversation, can go from, hey, this just happened and want to get a beer, or whatever it is. And it's a nice touch point. And, when I talk to agents, I ask them all the time, so how upset would you be, if your loan officer over communicated and they're like, are you kidding? Please. Right. I'm like, so you wouldn't be mad. They're like, never.
I've only had one. I've only had one ever that complained.
I can guess who that is. But it's amazing that to a man and to a woman, every one of them is like, yeah, no, please. If I don't have to call you and you're calling me, that's nirvana for me. You just made my life so much easier. That's one less thing I have to do.
Yep.
Oh, crap. I got to call Eric to make sure it's going to close so no one yells at me.
Yep.
Right? Yep. Okay, so we get approved.
Mm-hmm.
And what happens regarding closing?
Just the closing process in general?
Yeah, what happens? Do you do anything cool? Do the buyers, the buyers, what do you do for the buyers, if anything? Talk about your process going through there.
So prior to closing, obviously we call to go over the closing disclosure and make sure they're ready to go.
Who does that? An LOA?
That's typically my.
Okay, so you get that delegated from inside. Your LOA goes, Eric, make this call.
Yep.
You got to call these people.
Yeah, it's automatic notification. CD's out. Here you go.
Make the call. Okay.
Day of closing, typically try to attend. Boston was just voted was it worst traffic in the entire U.S.
Yeah.
We just took over Los Angeles.
Yeah.
So depending on location and time of day, I'm generally trying to go to the closing. Our registries are spread out, so sometimes it's difficult for timing. If I go, typically bottle of wine to the client, shake everybody's hand, go on their way. And then shortly after, I'm typically following up with the agents to get their feedback on the transaction. And I'll typically use that as an opportunity to then see if I can get them to sit down face to face.
Verbally? You're calling and saying, hey, it's Eric. The Smiths just closed. Tell me if we did anything bad.
Or if it's a non-answer, no message, and then I'll send a follow-up email. Okay. Just tried to call you, probably busy. Most times
So you are calling, I'm going to go with probably very few loan officers do this. You're actually picking up the phone and you're saying, hit me.
Yep.
You're literally saying, hit me. What is there anything
Yep.
I missed? Just on the off chance that something went down that they didn't tell you about.
Yeah, absolutely.
That a buyer was pissed about or annoyed about, or I don't like Eric, or whatever.
Yeah, and the frustrating part is, I mean, probably more than 9 times out of 10, they always say it was great, everything was fine, and I'm like, come on, give me something, because you want to make the process better, right? You always got to be making it better to add more value. So when they do give some type of negative perception or feedback, it's a great tool to work off of and either coach yourself or coach the team.
Okay, so after closing, I know this is a 9-hour thing.
Yep.
Okay, after closing,
Yep.
What are the 3 best things that you think you do?
Yep.
I'll call it the life. Everyone knows I call these people current clients.
Yep.
But in the life of your current clients, which are, by the way, everyone, these are just loans that Eric has closed. What are the 3 best things that people could implement pretty quickly in their own practice, in their own business that you do after closing? It could be 2 years, 1 year, annual.
Sure.
What are they?
So probably pretty easy ones are 30 days after we send a small flat rate ship care package. We've basically got it dialed in. It's about $10 a client with the shipping, fat max tape measure with our stuff, where they should be calling if they have any servicing questions. Obviously, they can call us. It's all tagged on the same stuff.
Oh, so you got the servicing stuff right in there.
Yep.
Okay.
Yep. Any questions? It basically, payment questions, referral questions, the whole bit.
And because it's an envelope, because it's a padded, it gets opened. It's a package.
It's actually a box.
Yeah.
Package,
So
it gets opened.
So instead of, by the way, snail mail is king. Snail mail is back to being king. But what you're doing is you're not just giving a giveaway. You're actually sneaking a lot of info that a lot of people would put in regular envelope or an email in the box where they're going to look at it. Okay.
Yep.
So it's how big's the box?
Small package, so it's about probably 3 by 7.
They got to open it.
Yeah.
I mean, it'll fit in a basic mailbox, but they got to open it.
Correct.
Okay, and there's servicing stuff in there. Okay, so everyone knows how fun are those calls after when you're on a call for 20 minutes with a servicing question. You're like, oh my, you got 3 people on hold. You're trying to pre-qual, and you're answering a servicing question.
Yep.
Right.
Exactly.
So that's in there.
Yep.
Okay. What else is in there? Yeah, I know you said servicing. Besides the gift, what else is in there?
So the servicing is actually on a magnet they can stick on their fridge, fat max tape measure, couple koozies, and a keychain, I think.
Okay. All right. And then, that's 30 days out. Then what?
6 months, check-in call.
Okay. Phone call.
Phone call.
From you.
Yep.
Okay.
If we get backed up, sometimes I delegate that, like middle of June.
Okay.
We try to still get those out.
But you don't.
Typically,
you don't want to.
Correct.
Okay.
Yep.
And yo, what's up? Thinking about you. Just called to say hi.
Joel, how's the new house?
Okay.
What's going on? Have you had any issues? You loving it? What's going on? I mean, typically you get the rundown. Needed a lawnmower.
Got it.
Whatever.
Okay. Then what?
Boiler broke the second day.
Then what?
And then the final, probably reoccurring annual is the kind of annual touch base. Mortgage check-in, life changes, all that stuff. That's automated to email, but we also call the follow-up.
And you're logging all the information in the CRM?
Correct.
Okay. So when you get new info, had new baby, it's going in there.
Yep. Yeah. So those become triggers. I mean, we're also pairing this with social media. So my personal page becomes iFriend their personal page.
I was just about to ask you that. Is that standard procedure for you?
Yes.
You close a loan with Jim Smith, friend on Facebook.
Depending on how good the rapport is, I try to get it actually implemented prior to
closing. While it's in and Instagram. If they're on Instagram, would you follow them?
Instagram and Facebook are the 2 major ones. Do
you use Twitter?
I do not.
Okay. LinkedIn?
Yes.
What do you do with LinkedIn?
I try to keep that primarily business. Obviously, I'm branch manager, trying to recruit, that kind of stuff. I try to keep that as business-centric as possible.
Would you link with Jim Smith, vice president at IBM, who you're doing a loan for?
Only if we've had business-type conversations or if he reaches out to me.
So as standard operating procedure, you're not linking?
Correct.
Okay. All right. So people handle that lots of different ways. I mean, I'm a link. I'm a go ahead, because to me it's the same thing as Facebook. If you're going to friend you on Facebook, there's no reason not to not to link in. Okay, no Twitter, Instagram. I know you use that.
Yep.
Okay, and I forgot. How did you answer that? Do you follow them if you see them on there? Do you actively see if they're on there? Do you look and follow or no?
Yep.
You do. Okay, so you are connecting on Facebook and you're trying to follow on Instagram as well. Okay, tell me about. Obviously, I see what you post. Do you have any rules for your social media? I think a lot of loan officers and real estate agents use social media wrong, actually. Do you have any rules for business to personal, or are you all personal, which is my thing? Or do you, one business, 5 personal, like when you're posting? Do you have any rules on that?
Yeah, I mean, generally speaking, my personal stays personal.
Kids, wife, what you had for dinner, hockey game.
Yeah, something cool
Patriots,
going on, Patriots game.
Whatever. Okay.
Of course, I'm a Patriots fan.
Yeah, don't go there. We're not wasting any time with this. Yeah, exactly.
Yeah, it's all the personal pages typically stay personal. If there's a major, we made President's Club this year or President's Council, whatever it was. So I'll do maybe something, really significant like that. Sometimes it gets shared over because we have so many friends and family that are friends and referral partners, and they may not follow the business page, and they may be doing that for a reason. They don't necessarily want that content. So we very sparingly do we ever mix and mingle the business and personal.
All right. So I'm looking at the clock. I want you to give me, we got tons of loan officers listening to this right now. They are closing 2 loans a month.
Yep.
That say they have nothing to do on their board.
Yep.
Okay. And they don't know what to do.
Yep.
And they were closing 4 loans, 2 refis, and 2 purchases, maybe by accident, sort of, kind of. Okay.
Yep.
And now they're not. Give me maybe top 2, top 3 things you turn this podcast off, people could do immediately.
I think the easiest thing is it's boots on ground. Get involved in the community with real estate agents that you can meet them close to where you are, but you need to do it on a repetitive basis. One time shot is no good.
Sorry to interrupt you, but thank you. Did you hear what he said? One-time shot is no good. That is the failure of almost every loan officer. Well, I'm doing first-time home buyers seminars, but they don't work. How many did you do? 1. I'm like, yeah, well, of course they don't work. You did 1. You got to do 12 in a row for 12 months. And by the way, by the 11th one, you'll have some people there. Right. That's how it works. So consistently do it. Now, unpack it. I mean, like if you live in a neighborhood that has an elementary school in it, do you join the PTA? I mean, unpack that for a loan officer that's bored.
Probably bullet point 2 would be just know what your interests are and be genuine about them. So, sure, if you're interested genuinely in the PTA, then, go get involved because you're going to meet a lot of people in the community. But if you're not interested in it, it's not going to come off very well. And then subsequently, you're going to create a lot of relationships that you're no longer happy about.
That's the loan officer that hates their job.
Correct.
Yeah. Okay, so get involved, number 1. Number 2?
Number 2 is I think to be genuine and know what your interests are, so that the only way that by out doing those activities you're going to build more relationships is to do it with people who like doing what you do. So I'm a Patriots guy. I like to tailgate. So find people that like to do that and that are in the real estate community. Right? Because now it becomes an easy way to deepen those relationships. And again, like you said, you're not going to hate what you're doing. I think the other major thing is to look at your just base process. Can you execute a loan front to back succinctly? If not, or if you're struggling, don't blame it on anyone else other than yourself. Look at what you can do up front to make it go through, because 9 times out of 10, it's not the processors or the underwriter's fault. You didn't do it right up front.
I'm going to go with, how about 999 times out of 1,000?
Right.
At the worst company in the world, it's probably going to be your fault.
Correct. I mean, it's
something you could have done to set up. And I find that is something loan officers, I'm stuck in the office working on my files. I'm like, how many do you have, really? Mm-hmm. You're stuck in the office working on 3 files? Really? Yep. You originated them that crappy? That you're sitting in the office messing with 3 files. How does social media tie into that just getting out there? How could you use that to get out there?
Well, I mean, I mean, there's tons of groups where you can find different meetup points, right? Of different organizations, of NARREP, ARIA, whatever community events are out there.
Do you comment on? Are you an active commenter? Like if you see if you see somebody putting something about the Patriots or whatever, I'm using that. God, I can't believe I'm even talking about this, but that's would you comment as a way to connect?
I'm getting better at it. My own paradigm is if I saw something cool that you were doing, I'd rather pick up the phone and call you and be like, "Hey, Joel, tell me about."
But that's fine.
Yep.
But that's the same. That's the same place. Meaning, you were saying be active, get out there, and I'm thinking to myself when you're saying it, wow, one of the easiest ways to do that right now in 2019 is to be connected to people on social media. You can see what they're doing, and if it's something you like as well, I tell loan officers all the time, like, well, what I do is I go through people's social media, then I call them and pretend like I like collecting beer cans as well. And I'm like, oh my God, you're creeping me out right now.
Yeah.
Like you're the biggest creep ever. You went through all their pictures and found their bottle cap collection. Right. And now you're a bottle cap aficionado. That is freaky.
Or worse, if you go too deep and have your first conversation and start telling them about what they like to do.
By the way, people, it's over when that happens. It's not good.
Weird conversation.
Yeah. You're creeping them out. So get involved. Get out there. Get involved. Take a look at your process. What else? What else could somebody do? One more thing. Dig deep. That's just stalled.
Yep. Well, I think other than being out there, I think, look at who your current relationships are, honestly evaluate them. And it doesn't have to be a fancy CRM. It could be a 3-ring binder, notebook, piece of paper, whatever. But start getting consistent on your touch points with those people. Look at how frequently you're actually touching them and how often you're engaging with them. Because you can have a massive amount of contacts in your phone or wherever they're stored, Rolodex. If you're not touching them, you're forgotten.
Yeah. That's when we do our crush groups. Call 3. It's call 4. It's a very quiet call. People are like, oh my.
Yeah.
When we go through okay, let's see where all your business came from and let's take a look at it. And when's the last time you talked to them? They're like, what? It's not good. So that's a great actually way to wrap this up. But that's something everyone can do right now. Take a look at all the loans you closed. You go back a year, see where they came from, and see how engaged you are with the people that referred those people to you.
Yep.
It's easy to do. Everyone can do it. Doesn't matter who you are, you can do it.
It's never too late to thank them, right? If they referred them, thank them.
Absolutely. I agree 100%. The finest compliment I receive in my business is when people call at me and yell at me that their hand hurts from writing notes. They're like, Joel, I hate you. I hate writing notes. I'm like, yeah, but it's so good.
I have some in my briefcase.
It's so good. Yeah, exactly. But it's so good, especially when an agent calls you and goes, I'm writing notes now too. It's even better. So everybody, we had Eric Douglas. We've got Eric Douglas live in the studio today, which I always prefer instead of over Skype or in the stratosphere. Branch manager with New American Funding in Boston Metro. And we just shared he shared some good down and dirty strategies, tactics that I think you can take away and use in your business right now. You also heard a little bit about his story, and I think his story is not unsimilar to a lot of people watching or listening to this that have come out of a bank world or maybe even a call center world and just don't know where to start. And, the first thing you got to do is start and don't know where to start. But here's a guy sitting right in front of me who's, closing 110 loans a year because he concentrated on it and, built his business out slow and steady. And any one of you all can do it. So, again, if you enjoy the podcast, please, like us, leave comments on YouTube, iTunes, my Facebook page, which is Big Joel Coaching. Or the Big Joel Show. It's one of the two. Sorry about that. If you do have any questions for Eric Douglas or for me, you can back into him there. You are on Instagram. Is it EWD? What is it? What's your...
Yeah, I'm just, I think if you just type in Eric Douglas, you can find me, or Team EWD is my business page.
Yeah, if you're a Patriots hater, you don't want to go in there. So, that's you want to stay away from there. And Eric apologizes for that. He's from Boston. They can't help themselves.